Good morning, everyone. Microphone check, screen check, although the mic's not going to be on for very long. So if you saw in the heads up or in the Discord chat or in the YouTube video title name, the rest of the family's sick. So just as a heads up, the microphone's going to be off for pretty much the majority of the day. I'm going to try to highlight the areas of interest, but it's going to be kind of in and out, and I still wanted to try to get the room running if I can, but it just might be a little bit of a weird one, maybe a little bit early. We'll see how things go. I'm the only one that's not sick right now, so I feel like I need my bubble, but just as a heads up, once we get through the morning prep stuff, we'll flip mics off, and then we'll just see what is available, and might be a little bit more quiet, a little bit more boring, but you know, hey, it is what it is. So good morning, everyone. Welcome. Hopefully you all had a fantastic weekend. Hope you all had a chance to rest up and get ready for the week ahead, the day ahead, and all that fun stuff. As per the usual, make sure to read through the morning prep PDF on the right side of the screen there. It's very important to understand everything that is inside there. Also, just a quick note for you all before jumping in today, if you're watching on the YouTube side of things, the stream does have between like a 5 and 30 second delay, which will definitely impact the timeliness of what I may be talking about. Of course, not going to be talking a whole lot today, but at any given moment. And then, of course, also, I just want to take a second, like we do every day, to thank all of our new members, subscribers, Academy students, VIPs, and everyone in between. Thank you all so much for the support. I'm super excited to have you all on board. Welcome to the SSFTG family. If you aren't a member yet, you have several different options to check out, a bunch of new and modified options on the main page of SSFTG if you're looking to further your trading education and career. The easiest way to start out is to join as a member on YouTube. It gets you in the chat room and a bit more behind the scenes and what's going on. Or if you want more info on everything else, of course, you can check all of that out right on the main page of ssftg.com. So whether you're here for the very first time or you're one of the VIP veterans over on the dedicated stream, welcome. I'm glad to have you trading alongside of me today, analyzing these crazy markets of ours. Let's take a look at some news, take a look at some charts, see what's going on for today, so that we've got a little bit of a heads up in terms of what's all happening. Don't forget to grab your morning DP levels. Those are posted for you this morning in the Major 7. NASDAQ, S&P, Gold, Crude, Euro, Bitcoin, and Ethereum. It's a race every time. As far as the news and everything is concerned, or the lack thereof, we really don't have any news today. There's not really anything to be concerned about from that perspective. Oh, there we go. That's probably a little better. Anyway, so looking at the news as far as what's going on for today, there's not really a whole lot happening. I mean, realistically, we've got the OPEC monthly reports at 7 this morning, but I mean there's nothing else. So, well, kind of play it by ear, I guess, and we'll go from there. So starting off on the, well, we'll just start from the top since we kind of hover on the S&P a little more lately. But over on the NASDAQ, we've got some halfway decent sideways movement, market pulling back a little bit. And realistically, where could the market be pulling back to? A lot of times they're going to be trying to pull back to some form of volume or some form of a zone of interest that was left behind. Previous stuck sellers, maybe longs that were buying back in the previous zone of interest, something. Once this thing loads up, geez. Come on now. There we go. So we left the POC behind at 15,571. And obviously after the market spends that much time up there, it's probably going to shift it. The one thing that we were talking about last week is how the bulls were really trying to get this to ramp up. But right there, they made the lower high. And from that lower high have collapsed down to a new low. That is a bit of a problem. The major objective on the pullback is going to be back towards like the 15,350s. So the fact that we pulled back down to the 450s and are finding a little bit of support, that's okay, but the seller's still potentially looking at this 71 quarter area as a zone of resistance. The longs who are trying to get it to go higher, now looking to get out at break even. So this 571 quarter area is going to be a little bit of a barrier as far as the NASDAQ is concerned. Over on the S&P, we've got a little bit of a deeper pullback. This one definitely a little bit more aggressive compared to what we saw on the NASDAQ side of things. How's it going, Ladislav? Good morning. Let me see here. This thing takes half a century to load up. There we go. Same thing here, 45.1775 is that POC, and this is what I'm talking about for the NASDAQ, that the S&P is already done, right? We hovered around there, they tried getting it to go, they failed, broke underneath it, the market came back, they used it as a break even, and it hasn't come back ever since. That's the same mentality that I'm looking at the NASDAQ, the S&P has already done it. The important thing here that we have for the S&P is that they're pulling back to the major volume node right around the 75s, and the market tried sliding under it, and, well, I mean, they did make a new low, but that was an immediate reversal and a failure back in the opposite direction. So with that reversal and movement to the upside, I mean, realistically, bulls are going to be looking to figure out what are they able to do with this. Are the sellers trying to get this to go lower and keep this train going? Or do we see that reversal and start creeping up? We won't see bulls emphasis until the POC either shifts or we get back above 517.75. So even though we are rallying a little bit further up, I'm still anticipating today to be on more of the bearish inclination first. Over on gold, predominantly sideways. I mean, honestly, I feel like gold has just been kind of in pause mode. It tries to break out, fails, and then goes back into pause mode. There's not really much happening. We have the bulls who may be looking to buy the pullback initially on the first drop, but they would have been back here, and that obviously didn't work so well. And once they got slammed, these longs are the only longs that are potentially still stuck in this whole thing. Now, if we draw a profile across the entirety of the move, we can see it's kind of interesting that the volume really wasn't there. You know, the volume didn't show up until down here. So if the bulls are stuck, I suppose, given the order flow, it's more likely that they're stuck from here at around the 1813s or so. The POC has shifted down to the 1799s. 1800 is right in the middle, which obviously is going to be a massive zone of support resistance, and you can see that is definitely taking place. So if we get around 1800s, it might be better to just kind of hang out, and it doesn't help that the POC's on top of that at 1799. Gold could be a little bit of an interesting one. I don't know. Might be better to just stay away. On crude oil, continuing its climb to the upside. Really, the big thing that crude oil has needed is the new high to prove it. You know, we were talking about how the shorts were trying to get this to migrate lower if we drag this all the way across. The sellers have been trying to work on this POC. They've broken under the POC multiple times. They tried to get above it and then below it and then a little bit above it, then below it. This thing's jerking all over the place. So the fact that we came off of this kind of trap on the low, we cycled back above the POC, did not come back to it to retest, and now we've made it to a new high. Now we've got some proof. Right? Now we can say, okay, you know what? Yeah, we're probably gonna keep this train going a little bit further up. 68.75 is going to be that major zone of interest if it wants to pull back. The other side of things is going from the top all the way down to the bottom, seeing where that is, which again is right in the middle, 69.33. That might be a little bit of an intermediary zone of interest for the market to pull back to along those lines. We'll have to kind of wait and see what they want to do, but that's sort of where it's at the moment. Over on the euro, I mean, the euro is just one of those markets that is either moving really well or it's a total waste of time. I feel like this rally to the upside was looking really, really strong, and we're finally pulling back to a major zone of interest. Notice my data's messed up. Gonna move it forward. There we go. 17,795 is the major POC of the entirety of the move. That is also the -1 DP of the day away from settlement. We do have a relatively decent trend to the downside, which was working lower. We broke out of the channel, and after that break of the channel, we made a new low. Now, after a break of a channel and a new low, the market could make another new low. That is definitely a possibility, but it may also be looking to reverse or start, you know, going a little bit more sideways from here. It's always difficult picking the bottom, but at least where the market starts going transition, this seems to be like they're already starting. I mean, this is totally different from what was happening. So the fact that the market's starting to chop around a little bit and we're getting closer to this last POC makes a lot of sense. Maybe a little bit of a small wedge. That'd be beautiful down here. We'll see if they can get it. Over on Bitcoin, mostly sideways, back and forth inside that giant pulse to the downside. We haven't made it through the lows or the highs of it. It hasn't really gone anywhere, in fact. The settlement is basically at the lows of structural support where all of the major buyers are going to be stacking up because they know that the risk is relatively light compared to the monstrous reward all the way back to the highs. I still think the market goes down to another new low, and the market will look for shelters like Shiba Inu Shiba Inu, Doge, and some of these others, but they will also be affected by a downturn in the markets. If we break a new low, it's likely going to create a situation where those are impacted the most at first, right? Same thing this last drop around, right? This last drop around, we see Bitcoin from the top to the bottom. What was that, about 18%, something like that, right? 19. So 18, 19% on the downside. Shiba dropped 30-something%, but then after that immediately pulsed back up another 30%. So those are the types of shelter markets that I'm talking about. Waiting for the drop to the downside where a lot of traders will move into USDC, USDT stablecoins. Side note, USDC is one of the most active Ethereum chains now, just saying. Good job, Coinbase. Got to give them credit where credit's due, I guess, even if I don't like them that much. So, I mean, there's a lot going on here for the crypto side of things. I would still rather see a pulse to the downside on Bitcoin because I think it's still due for one. Ethereum, however, is not necessarily needing one, although we are still hovering around that $3,000 mark. I would love to see this pulse one more time to the lows, but given that they have a new all-time high and everything changed a little bit when that occurred, so Ethereum's in kind of a realm of its own right now. Jumping over to the S&P, and then I'll probably turn the mic off a little bit more here. Actually, everybody's doing pretty well. Maybe I'll be able to keep it open. If you didn't see it, or if you missed the note in chat or whatever, the family's sick. I'm not sick, but the family's sick today, so I've got plans of not really doing the mic a whole lot, but I wanted to do the intro. Everyone's doing okay. We'll see. There's hopefully not too much sniffling and coughing in the background. As far as the S&P is concerned and the bigger picture overall, I mean, we kind of already talked about it, but if we're looking at the nearer term, right, looking at the 15-minute and kind of where we are from a structural perspective, that last high was incredibly vindictive. And the fact that they made that lower high on a big bullish blow-off, and then they never came back and tested it, look real close. There's no wicks inside there. They missed it. So with that miss, I mean, yikes. There's a lot of traders who got stuck up there and just got absolutely steamrolled. Technically, the top is right there, so the impulse is all the way down like this. That's a funky profile, but so again, the S&P and its POC reversal, much more obvious. The NASDAQ hasn't had that yet. but as far as the S&P is concerned, well, you know, it was pretty obvious. From the bottom, as far as confirmed swings go, looking across the high, I mean, technically, this was a confirmed swing, as disgusting as that thing is. Make that a thickness of 5. We started off with the confirmed swings, and I know that one was down here. So from a trend perspective, just seeing where we're at, so we can kind of see, because I know this one's really messy. And if I ever look at a chart and I'm like, man, I'm not sure. We've got highs, we've got lows, what's going on here? One of the easiest ways to decipher where you are in the overall sequence, just to look at structure and look at confirmed swings. Makes it way more obvious. The lowest point was here. They broke down, created an alternative swing high here, and that leaves behind the last high, which was up here. Now, I like tracking the previous two because as we launched a video on, I believe, last week, and one thing that I talk about a lot, that is one of my favorite trap locations. Beautiful example of that right there, and that little pulse higher, but that did break one of the previous confirmed swings, which means that they would have tried, or at least attempted, to get this to reverse to the upside. So with that reversal to the upside and a break back down, that reconfirms the downtrend. So we can move this back to the lows. They have a confirmed high. They break down to another new low. Confirm high stays. They break a quick new low right there. And that is a potential trend reversal in the opposite direction, right? Now, it's early. The major trend reversal, you can see, that's going to be up here, right? That's the big honking one up there. That's the prove it. Like, okay, yeah, sure, you got above these smaller ones, awesome, maybe this is a short-term correction. But if you really want to prove there's a reversal here, you're going to have to really get up there. And we can see that based on what the order flow is as well. The order flow is very high up there in terms of the POC. It makes sense, given what we're seeing. So the early signs of reversal are here. They're trying. That doesn't necessarily mean it has reversed, though. Top-weighted POC, 44.7450, is typically what you need for wave 1 in an opposite direction. Remember, a lot of traders are still anticipating this is a bear trend. Let's see where they're at. As far as the overall reversal off the top, that was an L5. If there was an L6, that would have hit it, and we broke down. After an L5, usually an L2. Picture-perfect L2 before rotating back down to a new low. It's kind of the period at the end of the story, so we need to wait. We have another L2, which means that we have 2 in a row. We're looking for the third in the sequence, which followed through beautifully down to a new low. Literally following the story on the 15-minute chart to the T perfectly. You couldn't ask for better. Now, after that, it got a little bit sloppy, though, right? Now, this is the important part and why confirmed swings are so important. It never made a new low. So this doesn't count as a pullback for structure. That doesn't work. It did make a lower close, but that's the only difference. We have an L4 off of the top, and after that new lower close, it made an L3. Both of those tell us to anticipate an L1 on the reversal, which is exactly what happened. So, again, it's following it perfectly. It's doing everything that it needs to do. Now, as it continues down, we have an L1. They hold it. We break down. We get another L1, and they make a very, very brief new low before reversing back up. The first stop for the sellers is going to be the L1, but that didn't work at all. The L1 got absolutely steamrolled. So these sellers are stuck. It doesn't mean they're wrong, but it means that they feel like they're under pressure. They're stuck. They're underwater. They've got some issues. We're in an L2, which arguably the S&P absolutely loves. We'll see what they're able to do from there. Now, all things considered, where we are in the overall sequence, if the L2 doesn't hold and this thing starts creeping up into the L3, then, I mean, now you're starting to talk a situation that is reversal, broken L1 style. Like, there's a lot of changes that happen when that occurs. So you got to be really cognizant of what's going on here. We're in a really kind of big tipping point. Looking back at value, right? Looking back at the value pullbacks that have happened after a new low, okay? That's important, because the inside lows tend to be a little bit nasty. After a new low, we've got smaller pullbacks, which are about this size, maybe a little bit wider out to here. But generally speaking, they are, let's look at a percentage basis or a tick basis or whatever my measuring tool's at. 67 ticks. We've got 96 ticks. 91 ticks. Probably what, double value, so 180? Yep, 173. You gotta love those double values. Man, they're reliable. We did have a little bit of an inside pullback, and those inside pullbacks, again, I'm not going to characterize, but I'm kind of curious, just out of curiosity here. The inside pullback last time around was still 96 ticks, and this pullback was 126. So they're still floating around that 100 range, and if they're going to double up, it usually goes to 180s. This pullback was 76. This pullback was 83. So now that we're climbing a little bit further up, it would make a lot of sense to see this go a bit further towards the 170s, 180s. And that parks it in an L3. So, I mean, a lot of things are still saying that this should keep going up. Although I do want to still be a bear. Well, market's telling me I might want to check that at the door for a minute. Again, if you missed the note, I will say it one last time before we go a little more quiet here. The family is sick today. They're all home. There's coughing, sneezing, and all gross stuff in the background. I am not sick, thankfully. I knock on any kind of wood that I can find. But just as a heads up, the microphone will be a lot less today. I'm going to try to highlight zones more than anything else. And just because I can already see the question coming up a million times, is my audio broken? Is there no mic? I've been there. Reduced mic today. Family sick. And it doesn't matter how big I make this. I know I'm still going to get the question, but let me make this like... Park that right there. There we go. It's like I've been doing this for a little while, I kind of know. It's been there, done that. So as far as the zones of interest, again, I'm going to try to talk when possible, but there will be a little bit of a reduced mic today. The overall movement that we started off with, looking at what's been going on, they kicked things off with a bull cycle to the upside, which really didn't follow through with anything before reversing back to the downside. And arguably, that trend lasted for a little while before breaking. New leg, break down to a new low, reverse, all the stereotypical stuff. From there, we've got the continuation higher, which, man, is a really funky looking channel, but technically it fits. That's the crazy thing. It hit it and still fit it. So as far as the overall momentum is concerned, we've got a little bit of a sideways, slightly bullish corrective phase, and then a continuation higher. This would be considered a rolling correction. Yeah, so the idea is looking at more of the S&P, kind of seeing what's going on, scalping the S&P and having fun on that side of things. But the primary reason for that is because the focus on the micro NASDAQ is such that there was only, you know, 1 trade a day, 2 trades a day that could have easily been done by paying a lot less attention to it and still have a lot of other opportunities on different markets. So this is kind of like a nice little in-between where, while especially when the market's doing, like, what am I supposed to do on the NASDAQ right now? You know? Like, I just stare at it, you know? Like, that's all I can do. And this has been the case for a while now. So because of that, this offers the ability to find some scalpables on the S&P while still looking for those nice, solid, in-out type, less management style NASDAQ swings. So it's a nice little balance in between. Still definitively looking at what's going on as far as the bigger picture and all that fun stuff. But I mean, really, like, when the 500 tick looks like this, what do you do? You know, like, yeah. I mean, you can go to like a 250 tick, but that might add like 1 moving average cross, maybe. Yeah, right there. So, I mean, it's just, there's just not much we can do when the market looks like this, and that's fine, you know. Got 7.5 minutes until the open. As far as where we are at the moment on the S&P, we are inside gap up, about halfway. And if you look at all of Friday's first candle of the day, which usually only happens about once a week, it's a 20% likelihood. First candle of the day was the high of day. If we look at the overall volume since then, they left behind the POC at 44.76.75. That sucks. Considering that we're trading at 79.75, that's not great at all. What a horrible spot to open. I would really love to move away from here sooner than later. Yikes. All right, well, let's see what they want to do, I guess. From the perspective of the waves, I mean, what else do we have? Like an ABCD, right? That's it. An ABCD puts it at a top of 44.91 quarter. We'll see what they're able to do. All right, I'm going to start dropping the mic a little more often here, and we'll go from there. As far as zones of interest, I mean, really, I got to say, I mean, the most obvious zone of interest is going to be right here. Right there. Doesn't fit a 3-to-1, but it kind of fits a 2-to-1. That sort of sucks. That would be the zone of interest, though. It's also a nice little scalpable zone. We're able to see if they get the bouncing that we're looking for. You're long at 75. Nice. Oh, it's all good, Ace. It's all good. It's just part of life, you know. I'm just glad I'm not sick. But see, for me, I don't. Maybe parents out there know this one, unless you really get hit with it at the same time, and that just sucks. But for me, I always get it where like everybody else gets sick, and then everybody else finally heals up and they're good, right? And then I get hit like a bus. It's like my body's finally like, okay, now I can crash. You know? It's like everything hits at once. I don't know if that's just like a parent thing or what, but unless you get hit with it at the same time, that's the worst. Because when you're sick and the kids are sick at the same time, then it's just like, please just shoot me. Just put me out the misery. Went long at 74 quarter earlier. Close. Nice. Great work. 5 minutes until the open. I would love to see the little bit of a dip. We'll see if they get there. But again, I'm going to start reducing the mic a little bit, and then we'll go from there, right? $9.28, right around the corner. That's the big time slot next, when things start getting a little bit bumpy, rocky, shaky, etc. So just be careful. We've got the stock exchange open right around the corner here. Oops. This down there. Probably have to move that around a couple times today, but hoping for a bounce off the swing high in the MES later, 87.75. That would be the major zone. I mean, looking at where things are opening up, I mean, this is a big spot. This is a really funky spot to open up, right above the previous day's POC, but underneath the major swing. Sheesh. That should be interesting. I would like to see a little bit of a pullback at the open here. A lot of traders on the NASDAQ could be looking for an L1 if we do get a little bit of a pullback, the mentality of a full flip. But, I mean, it really hasn't gone super far, you know. There's your NASDAQ L1. Jeez. S&P demonstrating a really heavy bear bar there. Some sellers will sell underneath that, knowing where we are in the bigger picture. Remember, we're coming back to a zone of resistance right into the open here on the 5-minute. Although, I would really like to see the resistance come a bit further up. They only made it up to 83.50. I was looking up to, like, the 87s. I'm right there with you, Steven. You couldn't quite make it up there. Pulling back to 76.75 POC, though. See what they do. First 5-minute bar is in. Very heavy bear bar, too. As far as the volume is concerned, the first POC of the day, 82.25. We'll see what they're able to do with that. Yeah, exactly. Just there's a lot of background noise going on with coughing and sneezing and videos and toys and just normal stuff with kids being sick. So it's just easier to have the mic on mute predominantly and talk every once in a while. So I'm like I said in chat, I'm not sick thankfully, but it'll probably hit me at the end. So maybe like next week Monday or Tuesday. That's when I'll get it. I know how this works. First zone of interest on the NASDAQ dipping back to the base of the wedge. S&P's got a little ways to go, though. Can't see anything with the executions on. There we go. All right, NASDAQ looking for the scalper's objective first on this next pulse. And the final objective, that's going to be back up towards the highs, looking for a continuation at least into the 530s, but preferably a little bit further. S&P starting to get a little bit closer. 71. Initial objective, if it just immediately bounces, would be the scalpers at 73.50. But if they're able to get a couple extra in there, I wouldn't mind a scalp inside of that, too. Still in pullback mode, hovering in the zone of interest. The Nasdaq's obviously pulling back a little bit further this time around. So the original zone of interest that I was trying to buy into is in the 11s. That didn't work. You'll notice when they first had that pop, they did skip right off of my scalper's objective and I didn't get filled. So you're dealing with a situation where they didn't fill a target and now they're sliding, of course. Go figure. NASDAQ continuing to squeeze to the downside, and it doesn't make any sense to increase any risk here, which is why I'm not doing anything here. It's kind of floating in the middle of no man's land. A lot of traders will buy in here to draw their average down, but I think it's a mistake. It's more likely going to be a situation that just increases your risk unnecessarily. It makes more sense that if they're going to slide down at this point, they're going to grab settlement and maybe even a new low. So why increase risk here? You know, it doesn't fit. The S&P still double bottoming. Oops. Holy POC, Batman. Jeez. 44.64.75 came out and just... oh, wow, that's a lot of volume there. Jeez. Starting to get the dip back to settlement on the NASDAQ and becoming a little bit more favorable to increase risk. Again, both of the trades, although both of the trades did have a bounce towards the target area and didn't fill either one of them, both of them are now invalidated. So mostly just looking to mitigate damage and catch the next scalp pop to the upside. But for the time being, at least, we're still not seeing any supportive nature enough to catch a full-out bounce, right? So it's still early. mitigating a little bit of a risk on this pullback, and now we're in a situation where effectively it's going to be very difficult to lose anything on the S&P. We're up to the first primary scalpers objective. I've already mitigated into that. So I really just don't want to see them lose below the break-even point. Now remember, my earlier break-even point's still at 68. I know it says it's down at 64.50 because it's first in, first out. So I still want to try to trail this one out. It just looks like we're stalling out at the first objective, and the anticipation is that the profit taking will cause another pullback to re-up into a little bit more of a favorable location. And that way, if it does just start falling apart, we can mitigate a little bit of the risk that way too. Slight reduction on the NASDAQ as well around the same spot, but the primary objective is going to be up in the 86 quarters. To the tick off the scalper's objective. Watching this area on the S&P, you got to see him pulse through. There we go. Scalper's objective again, 71 quarters or so. Got to see him get through. I wasn't able to buy more on the next dip, which is kind of a bummer, but... Alright, fine. I'll take the last one off there. We're starting to break back below the scalper's objective, and again, I already know the trade has transitioned into the negative in the wrong. It did what I didn't want it to do, so I'll just take the fact that we were able to get it back into positive territory and call it good. The NASDAQ, though, we had that deeper flush, and the reason why I like the NASDAQ a little bit more for a bit more risk yet is because we haven't had the scalper's objective test. They haven't hit that yet. The S&P has, right? That's why it's struggling here. See if they can pulse through these 64s, 65s. You'll notice I'm reducing risk in here because this is the break-even of the longer term. If they really hammered in the build-in, this is the spot. I would still like to see a pullback on the NASDAQ if they can get it. As far as the S&P is concerned, I mean, really, we just have a retest back into the candle gap, which is disgusting because that's after they had missed the candle gap target by a tick. So, you know, little vindictive there. That last pulse to the downside on the NASDAQ makes me a bit nervous if you couldn't tell by these exits. I would rather hedge against and just accept the fact that I would rather hold a lower average right now. The bulls have a pretty good bull bar here on the S&P going into 10 o'clock. I'm kind of curious how they respond to that. This is also a possible trap on the low ahead of the POC. There's a lot of things that are kind of messing around here. Very interesting going on. Yep, exactly. Buying around the POC on the S&P in this zone creates a very nice probabilistic area for a bounce. Of course, they went one tick away from my target. Seems to be the frickin' motto today. Jeez, what a vindictive SOB of a market we've got today. I'm going to jump ship on the NASDAQ. I'm not liking the way that this is looking. The S&P couldn't quite get the job done either. I mean, made it work on the bounce, but again, we already knew as soon as it started diving through that zone that the trade was kind of broken. It's just a matter of trying to mitigate damage, which is what I think we did pretty well there. But now that it's starting to crack through, it just doesn't make any sense to hold anymore. You know, the buyers had their shot, but well, they're not getting it. No thanks. That's why you got to get out when you know you're beat. When you know you're not winning the fight, GTFO. This is why. All those traders who were trading on hope, right? I'm sorry, hope. I know it happens every time. the person, I'm not talking about the person hope. Everybody who's trading on hope, hoping that it bounces there because the POC, right? Woo, the POC is there. It's going to bounce, right? Well, when everybody's telling you should jump ship, it's not a trading strategy to hold on to hope. It gets expensive real quick. I tried. I did everything I could to try to get that thing to roll up, but couldn't do it. In the end, you can see what ended up happening on the initial pulse to the downside. Tried buying into that wedge low. That didn't work. Started mitigating a little bit of risk, but it didn't. It bounced high enough for me to get one off to reduce my risk. And then collapsed down. Like we were talking about right about there. Doesn't make any sense to add risk here. Rather add risk in a logical point, which is what we did. And reduced the majority of it. Started pulsing back, tried to get it to go, couldn't go, reduced a little bit, couldn't go, finally gave up. Oh well. So in the end of things, with everything out of the way now, and now that we're flat here, let's look at what's up. Ow. Sellers continuing to pulse to the downside. 5-minute chart bears still own the market. Settlements next. What the heck happened to Bitcoin? What? What? Did I miss something? What happened? Up or down on Bitcoin? What a bull trap on Bitcoin. I think we go down. I've been thinking we go down for a long time. But while the market's this cheap, because remember, what the long-term objective, you got to think about this. This is the way that I think about it. It's not just like next week. This is like in 3 years from now is the way that I'm approaching Bitcoin. So with that mentality, when I look at where we are in current price at 44,000, I still think this is a valuable spot to DCA into, because I think in the long run, by the end of the year, if we do get the rally that we're looking at, we should be trading close to, it depends on what they do, right? If we get the drop that we're expecting, that I've been talking about for months, then we should get a drop down to about 20,000. So if you're going to buy right now, you've got to be okay with a 50% drop. And that could go down to like 12. So it could be even like 60 or 70% drop from where we are. Now, that said, in the long run, in 3 years from now, where do I personally see Bitcoin's price? I got to be honest, in 3 years, I have no clue. I have no idea where it could be in 3 years. Now, we have done some thought experiments on where it could be in 3 years. And those typically start ranging out closer to like the 2040s, but it puts prices close to $1 million. So if Bitcoin's projected price right now, even if it was 100,000, this is 60% off the highs. I'm okay with that. You know, that's why I say this is a nice spot for me, at least from the mentality of DCA in long-term hold, but I am anticipating a bigger pullback. Now, full disclosure, I am buying into this dip. So I'm just saying, you know, but not heavy, not like sell the house, buy everything you can kind of thing. This is just DCA, you know, smaller dip, makes sense to buy into, but it could go down another 70%. So. And remember that, you know, for me personally, I'm looking at shelter markets as an alternative. I like the shelter market alternatives because they offer up a larger reward versus the risk, in my opinion, for a riskier scenario. So let's say, as an example, you have your investment graph. That's not a circle at all. Your investment graph. And, you know, you've got like, I don't know, 75% of it, right, is stocks, bonds, ETFs, all your normal retirement portfolio stuff. Then if you were to cut that and say, all right, well, this is crypto now, right? This little 12.5% is crypto. And then the other 12.5%, right? That's what I'm talking about. These long-term, like if you were to cut that in half and say, okay, this is my aggressive allotment, that's what I'm talking about here, right? For Shiba and all of these other ones. Okay, right there. That guy. The aggressive long runs that could go to zero. I like these because of the amount of potential reward they offer up. If you're looking at things like Shiba and Doge and Crow and all of these kind of smaller names that bring a, you know, the crowd source to the table, we've seen what the crowd can do, right? Hedge funds have seen what the crowd can do. They've felt what the crowd can do. Okay, so, I mean, when I'm looking at these coins, this is nothing more than pure psychological speculation. That is all this is. My mindset is Shiba is to Doge like Litecoin is to Bitcoin. So if Doge goes to, let's say, $1, which I know like a year ago, people would have been like, what are you on? What did you smoke? Doge to $1? Right? But it made it to 70 cents. So that's a very real thing. Doge to $1, Doge to $5, that could totally happen. So realistically, that would put Shiba then at maybe 100th or 1,000th of a penny, which where it is now, by the way, is like 1,000, like 16,000% higher. So, you know, it's like every $10 you put in becomes 1,000. Like, I'm okay with that risk. Yeah, if it goes to zero, I lose $10. Yeah, that sucks, you know, but just go get a coffee. You'll be all right. You know, this is the long run stuff. I love these shelter markets. The same thing that we were doing with ADA when it first launched. Remember we were talking about ADA when it was way, way cheap. Same thing. It took 3 years to get up to $3 or close, but if you were buying back when it was even sub $1, sub like 10 cent, 15 cent, 30 cent, I mean, way back in the day. But then again, some of the other long-term ones fell apart. I mean, that's why you have to do this with like the riskiest of the risk capital. Were you gonna say me? You're my man now. Oh, that's funny. Yeah, for sure. I mean, that's the thing. Like, those types of coins, Shiba, Doge, any of them that put the power in the people's hands, which is what Bitcoin tried to do, but now after the manipulated pump and dump with JP Morgan and the a-hole Jamie Dimon and all the other BS that went on there, I think Bitcoin at this point is so unregulated, that the only thing that would have to change it would be like finding out who Satoshi is. And then, you know, Satoshi moves his money to something like that would be the only thing that would change what it is now, because realistically, who's accumulated most of the Bitcoin? I mean, when they were talking about, oh, this thing's garbage 3 years ago or whatever, this is garbage, blah, 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 blah. They were the biggest buyers on the dip. they own it now, you know? So it's like, I've kind of lost my love appeal for Bitcoin in a degree. You know, I still love and stand for everything that crypto is, but Shiba and Doge and all of the other ones, even though on the surface or even in their white paper they may be totally stupid coins for no, like they might even not have a reason at all. I'm not saying Shiba or Doge are, but there are a lot of those subcoins that are just like, what, why? But those are the coins that go up 900%, you know? So it's like, well, power to the people. Or I can't do a Shiba bark, sorry. I'm a 6'1", 200-pound Dutchman, okay? My Shiba bark doesn't come out of me. How good has the MNQ been the last couple hours? Managed a good 130 tick from the shorts. Nice job. You were on the other side of me, actually. You were short going into my longs. I was trying to buy the dip, looking for a continuation pulse. Obviously, the wider trend is down. But you'll notice my degree of interest quickly vanished until we got down to the settlement support. I tried buying the dip. It didn't work, and I exited. That's really what it came down to. I'm glad you were on the other side of it. There were a few other people in chat that were too. Nice job. Managed to mitigate most of it down to like a little bit above break even. That's really all it was. Same goes for the S&P. Which probably means that now it's gone down a little bit lower. This is where it'll go back up to the highs, right? Now that I'm not in it. I know how this goes. But gave him a shot. Didn't work. I mean, it kind of worked from like the perspective of being up or down on the day, I guess. But from a trade perspective, it was a total failure. All right. Well, obviously, with sick family and a million other things going on, and I'm not really seeing a reason to put any risk on the table from where we are now. I would rather see it go. I mean, man, at this point, it's not got much left. You know, that's kind of the thing here. If you look at this overall market sentiment, and the bulls are trying to hold this here, which is, by the way, right where we are. If they lose their grip here, that's a massive problem. Now you're talking like blow off wedges down to 44.20s, a negative 50 blow off, which none of these, by the way, are in any level of structural support whatsoever. We don't have any structural support until... Where's the last volume node? Yeah. 43.86. Oof. So this is a launching pad. Now, the cool thing is bulls, options, out of the monies, calls, etc. Like, you know, an out of the money backup in the stratosphere that expires next week or something that costs like $20. You know, those are the types of traders who are coming in here because their risk is incredibly small. I mean, you're talking literally a risk like that big. But at the same time, look at the reward. I mean, you're like a 10 to 1. The probability of success, by the way, is just beyond awful. I mean, you can't ever expect this trade to work more than 20% of the time. But with an 8 to 1, 20% of the time, that's phenomenal trader's math, right? So this is a zone. These are the ones that I like looking at from an options perspective, right? These are the ones I look at and say, you know what? I really don't want to risk the $120 or whatever it is because it's probably going to be a loss. But I'll go out on the options and, hey, you might find some nice little alternatives there. And that way, if they're wrong, they've got some time. You don't have to overmanage them. You just let them do their thing. You know, it's so much easier. Throw some verticals on there or something. You know, I don't. It just makes life easier. less management, you know. Anyway, obviously we're not going into the extended session with everything going on, so feel free to get those last questions in. We'll hit training time a bit early, and then I'm going to duck out probably for the majority of the rest of the day here. But yeah, it was an alright morning. Tried getting something going, couldn't get it going. You can see the majority of it is basically break even plus. I mean, from a P&L perspective, it's still a positive day, but frustrating in the way that it worked out. Get those questions in, we'll finish up. Where do you sell again or buy? Yeah, on the 15-minute perspective, I mean, from the bigger perspective in general, really, this is a spot here, like 44.50, where buyers are going to try to come in because they know that their risk really is just incredibly small. But I mean, looking at the 5-minute chart, I don't think you buy this kind of chart, right? Their attempt to buy it was here on the reversal, and they failed, and everybody jumped ship. So, I mean, their chance to get the bounce was there. They didn't do it. Now, with that miss and this continuation down, we've got more candle gapping to the downside. Got an inside candle gap inside right there. That would give downside targets to 44, 42, 75. So I think sellers still have a reason to sell until we make it down there. For now. Things can change, obviously, but... So, looking at what's happened so far, I mean, let's look at what's happened so far. We started off bear bar. Strong secondary bear bar. Strong tertiary bear bar. Fourth one, not so great, but there is some candle gapping in the middle. They closed up a lot of that candle gapping, which is where a lot of the buyers were exiting for those break-evens once that failed and rotated back down, and the sellers took back over. On that next breakdown, we open up candle gapping again. There's even a little more candle gapping in there. So things are suggesting that the market should continue to fall. And as long as those suggestions are still open, then realistically, the next target, 44, 42, 75. Looking at what's happened so far, we've broken above a previous 2 bear bar move. We have not broken a previous bull bar. And we have had a first long since the beginning of the day, if you count bar 1 as the top. So if I were going to sell and look for a continuation, even though it's incredibly far down here, I would rather wait for a bull bar and then sell above the bull bar. That's the only thing that hasn't happened so far on this pulse to the downside. We've had sellers selling above bear bars. We've had sellers selling above 2 bear bars back. We've had sellers selling 50%, 30%, structures, POCs. We've had them selling everything other than a bull bar trigger. That's the only thing that hasn't worked. Well, it hasn't happened. So... Now, obviously, too strong of a bull bar, you might not want to... that might be a little bit of a concern, but yeah, you get another candle that looks like this? Like, what buyer is going to look like that? Like, yes, that's the one, you know? Not many. So a lot of sellers will pack up above that and try to reverse it back down again for a continuation. If that fails, side note, if that sell move fails, then that will likely be the launching pad as a higher low reversal that we go all the way back up to the highs. Because remember where we are, the bigger picture. We haven't broken the low yet. That's the key. Hold the line! Doing good so far. Oh, okay, nice. Yeah, so you were more on like the 4-tick scalp side, a little more aggressive. I mean, realistically, the overall trade movement that you've got going on. Looking at the move from today, selling below bar 1, I mean, realistically, where it is, and again, the previous resistance zone, I wanted this to open a little bit further up for me to do the same thing. I was looking for it to close, what was it, 87s, I think was the price? There's no price scale, but I think it was like the 87s or something like that up there that I was looking for that kind of candle to show up on. And a few other people were too, and it was just a little bit too far up for me. Selling underneath that first bear bar, like we talk about, probability-wise, 20% of the time the first candle of the day is going to be the high of day or low of day. That does not mean that it won't work this time. And from a perspective to the downside, looks like it was a little bit of a late entry, but as far as the scalper's objective goes, I mean, it makes sense. Here's the thing. If I'm going to be selling the first candle, what do I have, right? What's the wind in my sails? Normally, when I'm looking at a trade, I want 3 things in my favor. So if I'm selling the first candle of the day, I have to approach it with the mentality of, I don't have much wind in my sails. I just opened my sails, in fact. So, unless there's some gale force winds or something, I don't really have a whole lot to rely on. So I have to maintain a low probability mentality initially. Right? Now, that doesn't mean that you can't start switching to a higher probability as you get more information. But if I'm going to be selling underneath this bar, whether it's here, or maybe on a little bit of a retrace, doesn't matter. I'm going to base my target off of a 2-to-1 on that first candle. Because those traders were not entering that thinking that they were going to win that every single time. They were entering that trade thinking, how much did I just lose by entering this trade? Right? They know the probability sucks. So it makes a lot more sense then to measure that up and then go for that as an objective. That said, the earlier entry, or later entry rather, and, sliding down, I can't say I disagree with it. It just seems like it was kind of a chase. Nothing wrong with that because it worked, I guess. But, again, that's potentially a reinforcement of bad habits that could cause some issues later on down the road. So just be a little bit careful with those. I don't mind selling underneath the first candle, but I can't assume the probabilities first straight out of the gates. Now, when you get the second candle, like, okay, well, hey, but how many times have we seen strong bar, total reversal, right? So it's not until we get the third candle that I know for sure, like, yeah, all right, now we've got a scalp. Then you can target that one out, which is probably why that fourth candle was the wick, right? Everyone's like, okay, good enough, let's get out. They hit their targets, but that said, when it reverses back up, we do have the context now. You've got 1, 2, 3, 4 bear bars back to the downside. The candle gap is still open, has not been closed in. Selling a pop to the upside makes perfect sense. I don't disagree with that at all. Taking a 1-point scalp, okay, that's fine. Going for a larger scalp, that's fine too. If you were to anchor your stop above the highs and look for a scalper's objective to the downside, eyeballing it would probably be around here, maybe a little under the lows. That's kind of the zone of interest, if you will, back to the lows. So a 1-point scalp is feasible, but just remember, this opened itself up, right? This allowed for the market to roll back over. That's why I was exiting my longs there, right? It's like, well, wait a minute, there's no reason to be long anymore. That's because the shorts took over. So I think they're solid, but again, there are some definite things that could be slightly modified to make them really, really good, I mean, they were already solid trades, but you know what I mean. Yeah, for sure. Nice, Ace. Good job. Yeah, it's always down to the risk reward. If you go back, I don't know when you logged in this morning, but I thought you were in a little bit earlier. If you're watching, or if you go back and watch, like the S&P and the NASDAQ today, those are great examples. They didn't work. They were totally against me pretty much from the start. But notice one thing when you watch those recordings back. What's one thing that's constantly being recalculated? My risk-reward tool. I recalculated my risk-reward tool probably 100 times in that trade. Because I have to know where I am. Is it still worth it? Should I still stay long? Should I get out? Should I modify my risk? Should I exit a little bit at break even, right? Those are all questions that you're asking every time that's calculated. My risk reward is modified so many times while I'm in the trade. It's nuts. So, yes, is the answer to that risk to reward. Yes, that is correct. Well, I'm not seeing any other questions coming out, so that'll do it. As per the usual, if I have any questions that I may have missed, you can drop those to me in the comments below on the YouTube side, or shoot me an email, jhb@ssftg.com. I know it's a little bit of a funky day with the mic and all that, but I'll probably be, hopefully, back tomorrow, full swing. It really depends. These things are always 50-50. Either way, we'll keep you all in the loop one way or another, and we'll just take it day by day, all right? Enjoy, rest up, and we will see you all tomorrow. Have a good one. Thanks.